Taking a look at today's interest rate markets, let's take a look at the 10-year note futures as they're realizing some selling pressure today. And after 3 days of upward price action, we're seeing sellers coming back into the market, pushing prices back down towards the low end of the range, the recent range, which is a multi-year low. And we're looking at the futures market 128.07, so 128.07 is the current level, holding just above that 128 handle on the day. And I think when you look at some of the reasons why we're seeing the selling pressure, basically I think it evolves or surrounds the Fed narrative. The Fed narrative is continuing to get stronger and stronger as more officials are indicating that they feel that there's a need to raise rates sooner rather than later, and that there could be multiple rate hikes this year given the current environment on inflation and the jobs market and some of the other dynamics. So that continues to unfold as we did get 2 more officials in the last 24 hours, basically indicating that they see a need to move sooner rather than later. And that's certainly impacting the market, because if you look at the data points this morning, retail sales were weaker than expected, manufacturing data was weaker than expected, and consumer sentiment numbers were weaker than expected. But nonetheless, the selling pressure continued because primarily, I believe, of the Fed narrative. Now, when you look at the yields, 10-year yield up 6 basis points today, from 171 basis points to 177 basis points. So pushing back up towards, again, that 180 level. 181, I think, was the intraday high that we did see about 3 or 4 sessions ago. So top end of the range. And the entire yield curve today is shifting higher, which is, I think, another thing that's worth pointing out here. When you look at the 2 years all the way up to the 30 years, they're up substantially. So the middle of the front end and even the middle of the curve is up as much as the back end of the curve. So the entire curve shifting higher today together. And that's an interesting dynamic as, again, I think adjusting for the idea that many of these Fed officials indicate that they are anticipating rates moving sooner rather than later, and possibly even more hikes than are already priced into the market.